I want to show you how I made over $19,000 on a single S&P trade this week, and more importantly, how it was a textbook example of a playbook that we're building. So this setup was a powerful combination of both technical analysis and S&P options positioning. This is a setup that you're going to want to see, so let's break it down. The first part of this trade is the big picture context. So before any trade, you want to take a step back and ask yourself, what is the context of the trade big picture? So looking at the technicals on the higher time frame, we know that the market has been bought up on all dips pretty much since the tariff lows in April. Every major dip has been bought up. This is a very clear trend. And as you can see on the daily, we do have the trend being respected quite significantly, and this past week was no different. So Tuesday we started with a gap down that got bought up and then dips the next day on Wednesday. So the market was closed on Monday, so Tuesday was the first day of the week. This dip and gap down got aggressively bought up and closed on the highs, showing that buyers are still in control and looking for areas to get involved. Then on Wednesday we back test the overall trend, hold, and then managed to close right near the high. So this is the price action from Wednesday. You can see we opened up, bit of consolidation day, we filled the gap, which is a key thing to note, and then managed to close up higher. So this really sets the stage for the overall setup. So let's dive in to the actual setup itself. So with the big picture being supportive of dips and the overall trend, we want to notice some other technicals on the lower time frame that are of importance. So 64.41 is from the higher time frame, which is important, and then 64.45 is the opening print from Wednesday. So on Thursday when we opened up here, you can see that we had a modest gap up that consolidated for a bit and then started to turn lower and then began to respect these technicals super well. But before we dive into the execution of this, let's now look at the gamma landscape. So we're separating this trade into two parts: the technicals, which you can see there's multiple points of confluence, both technically and also behaviorally, with market structure respecting dips, getting bought up, and supporting the overall trend. The gamma landscape was also set up very nicely for a trend move on this day. So when you look at the gamma, the dealer positioning was aligned with the technical levels. So for the day, we have an iron condor, actually two iron condors present, which if you don't know is simply a bet that the price of the S&P will close within a certain range. So in this case, there's an iron condor between 64.80 and 64.10, and then also 6,500 and 6,400, just above 6,400. So essentially what this person or people are betting on is that the overall market will close somewhere in between them. That's where they stand to profit. And what has happened here on this day is the positioning between those two legs of the condor is fairly thin, which often just simply means that price is a little bit more freedom to move in the direction that it's going to go.